We have an all-star panel ready to break down the action this week. We have Paul Dietrich. He is Fairfax Global Markets CEO and Chief Investment Officer, who says there is one industry poised for big gains in 2014. He'll tell us what it is. We also have Jason Rotman, Lido Isle Advisors Managing Partner. He says it may be time to look for international opportunities. Philip Strebel, he's down in the pits of the CME, and my buddy Sandy Smith is joining us as well. Sandra, I want to start with you, and let's talk about interest rates. Liz was just mentioning yield on the 10-year was down significantly. I think about double digits today. Is that why the market didn't have a big sell-off on the jobs news?
Yeah, I mean, there was a huge flight to safety in today's trading session. I mean, Treasuries rallying across the board from the short to the long end of the yield curve. The 10-year, as you just saw, dropping below 2.9%, fell 11 basis points on the session. By the way, for the week, the 10-year losing 14.5 basis points. That was the biggest weekly decline in the yield in the 10-year that we've seen dating back to September. So a significant move here, guys. And if you looked at the 5-year, it fell 12 basis points, a big drop there. And the 30-year lost 7.5. So steepening of the yield curve, guys. And by the way, this wasn't all the jobs report. Credit Agricole just put out a big note reacting to this significant rally in Treasuries, basically saying that this was some technical unwinding of the trade that we've seen in Treasuries of late. So something, I guess, to take note of as we do see those Treasuries really rally and the yields across the board coming down, guys. Back to you.
Okay, well, see, that's the thing. And we look at what's going on with the markets here. I've got to right away ask Paul Dietrich, is this some type of signal? We had two people, Maury Harris of UBS and Dan Veru, who said, toss this, not told you so. They don't like this number. They don't think it's real. Where do you stand on it as far as investing in the markets is concerned?
The only sensible way to look at these unemployment numbers is to look at the long-term trends, not just simply 1 month. We know that this data is wrong. We know it will be significantly revised next month, just as we significantly revised the November figures today. So, you know, what are we talking about here? Let's just wait until next month when we get the real numbers.
At the same time, Jason, talking about real numbers, a lot of people look at the market and wonder whether the current number is real or not, or whether it's a little overblown. Do you think the market's overvalued at all, Jace?
I do. I mean, the thing is, it seems like just yesterday that we were at 1,500, and now we're a solid 330 points higher just 12 months later. I'm not saying we shouldn't be up here. You know, things are going quite well for the U.S. GDP is growing. Jobs growth is growing, especially if you look at last month's revision. It was plus 40,000. So things are going good. 1830 is a little rich for me. I could easily see a 3% correction. I'm still a bull overall, but I think we're going to actually come down from here.
Phil Strebel, how can you not believe in this market? And I'm not a cheerleader here, but we were down more than 40 points at one point on the Dow Jones Industrials. There was red on the screen, a very bad number. Labor participation looking absolutely terrible. The Dow ends down, I believe we pretty much settled, 7 measly points. Trying to come back there. It was not a bad day. Gold, though, jumping $17. What did the traders seize upon here?
You know, it's really funny because if you're a stock trader, you're saying, what bad number? I mean, that 74,000, right. Again, it's just one number out there. You know, you got to look at a whole series of data. So people don't believe it. They're going to wait till the end of the month. They're going to wait for the Fed, the 28th, the 29th. Fed's going to continue their taper process, you know, regardless of this number. It's going to show that the economy is still continuing to improve. You're probably going to see the stock market continue to rally upwards. Where these guys were looking at was the gold market. I think a lot of people are concerned that interest rates, they got a little too high. They're probably going to come back down a touch. There'll be some kind of
but silver, you know, too, Phil, I don't mean to interrupt, but silver, as far as percentages, double that. I mean, silver had a great day today.
Yeah. Silver is a place where you really want to be. If you're going to go into either gold or silver, I think silver is where it's at. I mean, silver's got so many more uses. They've got the medical side where gold lacks. They've also, you know, you've got a half a dozen electronic equipment around you that is comprised mainly of silver. I got a nice silver watch on right now, you know. I mean, silver's where it's at for the future when you're looking at metals. So I think that it sub 20, I think, is a good value.
Paul Dietrich, people are looking for pullbacks. You only have to look at oil if you want to see a pullback. And you have some oil picks or some energy picks in petroleum products. I'm wondering if that's because you think the oil market's pulled back too far.
No, I think oil will go down even more. The Energy Department this week said that oil, for the first time in history, the U.S. is going to produce more oil than Russia or Saudi Arabia.
So why are you going into the oil companies, Phillips 66 and Marathon and even Western Refinery?
Because they're refiners, they are not oil producers. And because of the EPA and because we haven't built a refinery in 30 years in the United States, they have kind of a monopoly and can charge anything they want for those prices. And as the oil production prices are going down, their margins are just going to get bigger and bigger. And I predict that that's going to be one of the best performing stocks over this year. People forget that it's illegal to export crude oil from the United States.
For now, that might change.
But not this year, because Congress is not going to do anything in an election year.
Well, from crude to copper, Jason actually likes some copper names, Sandra, but talk about copper's behavior today and what it's really telling us.
Well, we saw copper rally. It's the opposite direction that you'd think copper would go on a day when we got such a dismal jobs report, considering it's so closely tied to the economy, Liz. But what's happening here is there is a perception, and I will leave it as just that when we get these dismal jobs numbers, that perhaps the Fed won't be tapering as aggressively as once thought, and that potentially could lead to a weaker dollar scenario and a higher commodities situation. So you normally would see these commodities markets sell off on such a jobs report. Not the case today. It was a rally across the board in metals.
Well, copper. Jason likes it too.
Yeah.
And who produces a lot of copper but Chile, the country of Chile. And ECH, if you want to bet on Chile, which is largely copper, is the way to go. But I've got a caveat here. Chile just elected a new president. She wants to spend a lot of money. She wants to nationalize a lot of industries in Chile, raise taxes. Isn't that a concern for that bet?
Yeah, I mean, one would think so, but the thing is, you know, Chile has a serious track record of extreme growth versus its Latin American peers. I hear what you're saying about the new president. I don't see that's a huge obstacle. I think we're so interconnected globally, and Chile produces so much that the world needs. I mean, Chile's trade balance is incredible. Chile has an incredible realm of exports that the world uses, such as China. China's copper imports have increased 30% year over year. So all this talk of a China slowdown, I mean, it's really not happening. We're not seeing signs, and I'd rather keep my copper bracelet and let the Chicago guy have his silver watch any day, because copper is very, very valuable. And if this global housing market keeps on heating up, which I think it will, I think we'll see copper have a heck of a year.
Phil, what happens on Monday when the markets open? They completely forget this number. They figure it'll be upwardly revised at a certain point, and then what becomes the focus?
I think we're going to have a significant barrier at 1850. I mean, think about it. We started 2013 at about 1,500. And we're almost at 1850 now. I don't think we're going to get close to 1900 anytime soon. I think we will see, before the next Fed potential taper, I don't think we're going to see a big run up into a taper. So I think we're at short to medium term high levels at this point.
All right. And if you want to find Jason, just look for the guy with a green wrist, because he's going to be wearing those copper bracelets. Guys, thank you very much. Sandy, wonderful to see you as well. Paul, Dietrich, Jason, Robin, Sandra Smith.
Thank you.
Scott Bauer, we're going to check back with you when the S&P futures close shortly. Thanks.